Well, markets don't always move in the direction that people want it to. So there's a lot of other factors that are affecting gold. But if you take a step back and look at the broader picture of gold relative to all the world assets, like one thing I like looking at is ratio charts of gold relative to the risk parity index. That's one, which basically just tries to keep an equal weighting of risks across all the different asset classes, and then comparing how gold is performing relative to all the alternate choices that it's competing against. And to me, it looks like it's forming a very strong basing pattern here that's going to launch a move to secular new highs. I expect that to take place this year as we advance into the final quarter of the year, as well as accelerating much further over the next couple of years. So I think gold bugs and also people who have not participated in the gold market that really should have exposure there to protect their financial assets and freedom will be pleasantly surprised.
And Philip, do you agree? It's a good time to buy gold. It's got a good future. What do you have to say on that subject?
Well, I think it's always a good time to review your allocations. And I think in times of uncertainty and when there's so much polarization in the market, it's important to revisit that and look at allocations anywhere from 10 to 20% of your investable assets and allocate those to gold. So you're going to find that, with these fluctuations and these pullbacks, when we see consolidation in the market, it's really going to be meaningless in the long term, because if you look at the track record of gold, the purchasing power of 1 ounce of gold will still buy you a fine man's suit today. And back in 1967, 1 ounce of gold would also purchase the same suit. Mm-hmm. So it's about wealth preservation and about maintaining your purchasing power. And I think if you're allocating the right amount of your portfolio to gold on an ongoing basis, you're always going to be safe in that respect.
So we should not be concerned about these fluctuations and view it more as an opportunity to purchase when the prices are down. Do both of you, or do either of you, feel that the precious metal prices are fixed, and are they manipulated, or do you think that the price reflects supply and demand?
Yeah, there's no question about it that especially the silver market, which is an easier market to move around, but also to some extent gold definitely has been manipulated during the years. I believe the reason why now it's going to be quite different than before in terms of a significant rally is because it's very difficult to manipulate supply. There's a lot of things going on in the world right now where there's actually a lot of like the big producers of gold basically have a supply cliff issue. So their mines are running out of the ability to pull gold out of the ground. And they're in a position now where they really need to start looking at explorers that are actively pursuing new projects with high expectations of high grade gold as well as silver. And because those companies that are going to try to pull that new source of the metal out of the ground are doing it at a time where there's going to be inflationary pressures moving forward, some of those firms are very small and they don't have the financial wherewithal to necessarily continue operations. That's why over the past number of years, a lot of the smaller mines that actively pursue this stuff is either shut down. So we have like less supply available in the market, especially in the silver space, but also to some extent in the gold space. And it's going to require some of these intermediate and larger term players to make acquisitions. And I think in the process of that, you are going to see more activity and more talk in the gold sector. And it's also going to make it known to a lot of people that there is a supply issue. And no matter how much you manipulate, it's going to be difficult when you have a situation where not only is it difficult to just flip a switch and turn on a mine, because it could take over 10 years to actually get a mine into fruition and increase supply. But at the same time, because of the pandemic and because of the trade conflicts turning into potential trade wars as we move forward, that's going to cause a lot of countries that actually have ownership or access to gold not allow those commodities to move out of that country, and we're going to have to kind of build resources in the West to actually extract more gold. In the process of doing that, that's going to bid up the price of commodities because it takes a lot of energy to pull stuff out of the ground. It takes a lot of steel to produce the equipment that you need to pull the stuff out of the ground. And also, it takes a skilled workforce where there's labor shortages. So I think when you combine all those factors, it's going to put pressure on the inflationary aspect of the input costs of gold and silver production, as well as the separation of some of these precious metals from gold. And because of that, there'll be less supply. There's also issues with a lot of the governments around the world where they're making it more difficult to actually get permits to actually operate gold mines. So what normally would take maybe 8 to 10 years to get a mine into production, it's taking upwards to 20 years in some cases. So this is a pretty sticky situation on the supply front. And I don't see that going away anytime soon. There's an issue besides that. I'd just like to touch on something from your previous question, like why I think gold is going higher. There's a part of the issue is that there's two sides to the camp. There's a group of people that believe that there's going to be deflationary forces that are actually going to impact the price of gold and keep it down. What a lot of people don't realize is it's in times of deflation that gold actually prospers. It's not just inflationary. And on the flip end, you've got people that believe there's going to be this rampant hyperinflation. I don't see ground in the middle. I do see it. I do agree that it's either going to be, I don't even think it's an either. I think it's both. I think you have a situation of massive deflation hitting pockets of the economy. But at the same time, because of the supply problems and the increasing need for some of these precious metal assets, especially silver when it comes to new era economy kind of things, like, for example, silver is used in the electrification of the grid. It's used in 5G technology. It's used in all kinds of electrical equipment. And we already had quite a significant rise. Like it's already over, like near over 50% of the demand for silver is from industry. That's only going to go up over time, and we don't have new resources to pull it from. So I do believe that you have the perfect storm. You've got rising demand in the silver space due to the industry, but in the gold space, because of simultaneous inflation, deflationary forces, you're going to have a bid up in assets going from extremely overvalued pockets of the economy where a lot of these hedge fund managers, large preservation companies are going to have to allocate a portion to the precious metal sector. And just even a small portion, given the size of the market, would elevate prices tremendously, especially when you don't have the necessary supply. So you have low supply, high demand. Supply and demand says prices are going up. The purpose of gold is not really like, should I buy it because I'm going to make a quick trade? In this case, I do believe we're going to go through a situation that will make the bounce off of last year's lows in April that were pretty dramatic, especially in silver, look like a ball in the park. But it just takes time because we had such a big move, and it's natural for markets to consolidate for a period to build energy and cause higher. A lot of weak hands need to get flushed out. But I do believe we're getting closer, and we're not years away. We're basically either days or a few months away from this. So it's pretty imminent.
So if one has to choose between gold and silver in terms of allocating their investment in gold and silver, What allocation do you recommend? I mean, I agree with you. Silver has the industrial dimension to it, that it's used industrially. Gold is maybe backing some central banks holdings, etc. What what allocation would you give the two assets? Do either of you have any opinion on that matter? Is it
Yeah.
50-50, or do you still prefer gold over silver? What do you think?
Silver is a much more volatile kind of animal, and it had a much more dramatic move up. So for people that aren't comfortable with some volatility, I don't think it's going to be that bad. It's like we've already had, you know, it's like a few dollars. It's been pretty much consolidating in the low 20s
Mhm.
to, and that's about all. I mean, I don't see it doing much more than that, low 20s to high 20s. But the breakout, my long-term target over the next couple of years is like between 94 and well over up to as high as 188. That doesn't really matter. The point is, it's pushing 100 at least
Mhm.
in silver. Okay, so that's kind of where it's going.
In
So
what time frame?
I would say over the next 2 to 3 years.
Okay.
It could happen sooner if there's some kind of specific event that
Mhm.
that causes an overshoot, because markets tend to do most of the move in a very short period of time, and then the
Mhm.
rest of the time for the people that don't get in just before the event, they could be sitting there waiting for a pullback that never is material enough based on the amount of risk that they're taking at that higher valuation. So it
Right.
just makes sense not being too cute, waiting for like worrying about whether there's a $1 or $3 or $4 pullback in silver, even if there's some tail risks due to, let's say, margin liquidation in overvalued assets that spill over with a beta effect into the gold space because of kind of the same reason that happened last year. You had a situation where people were using gold and silver as collateral to back, volatility in other assets, and they had to sell their silver and gold. And there's not a lot of like it's a market that moves very, very quickly if a few people sell something.
Mhm.
But the nice thing about it is you could take advantage of those short-term moves if you know where the long-term situation is going. So I'd say somewhere in the where we are now to the low 20s, maybe 23 should be the low. If it goes lower than that, it would be like a second. Like, so I'm not expecting lower. It's just that it's so short term, it's irrelevant. And with the upside being multiples of the entire price of silver right now, it seems like a steal to me. So in terms of answering your question, I would be comfortable with I'm personally my family is overweight silver because I believe that the reward to risk is skewed in that direction. If you look at the ratio of silver to gold, and I'm not just looking at historically, but I'm looking at forward market pressures. It just appears to me that there's more of a supply problem in the silver space.
Mhm.
I also like the fact that silver is one of the only assets where the supply of silver actually comes from other assets like gold, like it's pulled out of gold. So you can't just look at the silver to give you an indication of where it's going. So I like the fact that they're connected at the hip. And when I look at those ratio charts, silver's definitely breaking out in the intermediate term relative to gold. Over any given period, like less than a month, whatever, sometimes gold could, outperform one day. But if you look at the reward to risk, silver has it beat. So I would say for aggressive traders or investors, I would say 2/3 silver, and then the rest gold. And for people that just want to just play it safe, just 50-50.
And what about buying producers as opposed to buying the bullion? Any opinion on what
Well,
allocation should be there?
you got to really understand where in the cycle they are in production. Every company's different. There's so many bad companies. Like when I went through the list, like it's hard to find something that I like, but there are more of the companies with the upside are the ones that are going to be bought out, like kind of developers that are turning into producers that are near jurisdictions that are near larger mines so therefore they would understand the terrain around it. So I think like something like let's say Barrick had a property around there where some independent developer becoming a producer had like a really nice find of gold, I believe that companies like Barrick will buy them out, bid them up so you can make a lot of money. But if you don't look at special situations like that and you're just looking at like an ETF or just randomly just looking at any producer, I would say that typically you have a situation where there's a huge, there's a lot more leverage in buying some of the junior miners than you will see just buying the actual physical. But that's not the purpose of buying physical only. The purpose is if you get into times of extreme stress where the whole monetary system falls apart and fiat is literally worthless. And a lot of these ETFs or companies, they may be like they could be unallocated, and you don't actually own anything. You own a promise of something, which is no different than just owning, at the end of the day, just fiat currency. Because
that I had heard that for every 60 for every 1 ounce of physical bullion, there's 60 ETFs that are not exactly backed by the hard physical.
And even the ones
which
that
is concerning.
Yeah, and I mean the PSLV is the closest. Then you got like the SIVR, which is the Aberdeen. It's not quite. I think the PSLV is probably the best in terms of getting a like if you're doing getting silver, that's backed. But that's not how people look at it. It's kind of like I'd rather own the actual piece of physical.
Mm-hmm.
In tough times, how are you going to get access to it? Like if they're like if things are so bad and prices go up, it usually means that there could be a run on the banks. There could be a situation where you can't even call the person to get access, you know, to your physical. So so the point is, it makes sense to either buy physical, like and store it at your location, or have it at a reputable dealer that actually, you know, stores it in a place, in a safe and secure place. And what I like about SWP is that they have like a level 3 kind of class 3 vault that's in an undisclosed location. So I just like the idea that people just can't get their hands on it easily.
Mm-hmm. Philip, would you like to talk about that, the allocation and the segregation of the gold that you're holding for your clients? How secure is it?
Yeah, well, I think to kick that off, I think it's important to understand that Class 3 vault is the most secure you'll find in the industry. So that's at our head office in Grand Cayman. Our vault is a Class 3 vault. And what's really important, I think, for individuals who are interested in investing in precious metals and having a physical ownership of those metals, is that they understand the importance of allocated and segregated and what that means. So all of our clients' holdings are stored in an allocated and segregated fashion. So they do not relinquish the ownership of those assets, and anything that they own and ship into us or purchase and put into storage with us is put in a segregated bin under their account number. So they actually will never relinquish ownership of those assets. And what they physically have with the serial numbers and have purchased will be what they would be able to physically withdraw at any point in the future, or they could sell. And that's a unique feature of strategic wealth preservation as well, is that we do allow our clients to book appointments to actually come and visit visit the vault, and we have a viewing room where they can actually see their physical holdings and withdraw them at any time. This is not available with every dealer and vault in the industry.
I think that that's a really important aspect of SWP, is that allocation and the segregation. There's a tremendous peace of mind to know that your gold is in safekeeping for you, and it's secure. So I think that that's a very important point. Uh, in terms of your clients, who is buying gold right now? Is it countries? Is it central banks? Is it individuals? Who are the buyers right now
Well,
of gold and silver?
it's interesting because you've actually touched on the three major categories of purchasers at this time. So we specialize in looking after high net worth individuals who may also have their own privately held companies and their own family trusts. So we work with family offices as well. And these are people who really understand the importance of having a physical allocation and are looking for the type of service where they can actually pick up the phone and call and speak to someone that they have a relationship with. So that's the types of individuals we're dealing with on a daily basis.
If you look at the market as a whole, Efram, do you have any comment on who are the biggest buyers? Do you think it's the central bankers? Is it countries? Is it who's buying gold right now? What are the big drivers here?
Well, the big driver is like the number one thing that I look at is what people say and then what people do. And when you have like the Fed talking down inflation, and then at the same time buying an enormous amount of Treasury inflation protection securities, it's kind of like seems kind of strange. It means they don't actually believe what they're saying. They're actually trying to protect themselves. It's also possible they're just trying to make it look like there's expectations for change, so that if something doesn't happen, they could then sell off their tips and then kind of, buy time. So that's difficult. But I would say there's a lot of sovereign nations and central banks that have been buying gold and increasing their acquisition over time. I believe that's going to continue over time. I believe there's a lot of hedge funds that are also doing it periodically, but I really believe that we haven't really seen anything that material yet. And I believe we're just on the cusp. There's going to be an event that's going to shock people. It's going to come out of left field. And I think that will be the trigger. People will say, oh, we couldn't see it coming, but it was quite obvious when you look at all the, if you look at the flow of capital in different markets and where we are in the cycle, it sure looks to me as if there's going to be some event that's going to be pretty big. And I think one thing that nobody's talking about, or where not too many people are talking about, is that the Federal Reserve has been like printing a lot of money over time. People keep on talking about the 120 billion a month business, but at the same time, one needs to realize that that money doesn't necessarily go to where it needs to go. It doesn't go to the economy directly, because what happens is the commercial banks, literally, there's this thing called reverse purchases, and they're actually sending money back to the commercial banks are sending it back to the Fed because they believe that there's going to be inflation down the road, and they don't want to be holding a worthless money bag. And so what happens is that there's actually a drain of liquidity in the system. And even recently, some of the banks like Wells Fargo have like cut off credit lines to individuals.
That's so alarming. When I read that last week, they're the first bank to announce that, but I'm sure many will follow. That's very alarming.
No, it is alarming, and they'll cover their tracks. People will say, "Oh, it's just a one-off," because Wells Fargo is in a different situation because of their prior issues, but it's not. It's going to go to it'll likely spread to JP Morgan and other major banks. And it's kind of like, a cockroach. When you find it in one spot, it's like everywhere. So it's probably all around. So that is concerning, because you have a situation where like lots of small and medium-sized businesses that rely on personal credit lines to just let it go. And with this pandemic and shutdowns and all these things, it's not a good situation. What makes it even worse is that probably at the end of the day, governments are going to tilt in the direction of, continuing to do fiscal spending to just support zombie companies or companies that really, they'd rather just collect the cash than do anything. And if you get that situation, it's just going to exacerbate the labor supply problem, because there's a lot of people that could do the job that aren't doing it because they're getting access to capital. And there's other ones that can't get credit now because they're draining it from the system. So where's all this money going? The Fed is basically buying up assets. And the thing is, it's true that their balance sheet is getting bigger, their debt's getting bigger, but you also have to look at the fact that the things they're buying are also going up. So are the things they're buying going up as fast as the debt they have to repay? Maybe right now it's okay, but it's not going to end well, because the second there's any, markets don't grow to the sky, and the second there's any kind of reversion, and I'm not saying to the mean because I don't buy mean reversion, because markets are self-generated and grow, but as soon as there's some kind of corrective pressure, and likely inflationary pressures are going to be one of them, you're going to have their assets fall a lot faster at the same time where supply shocks are going to be pretty sticky. And so you have the worst combination: inflation and not good access of capital to the economy. And you could get into a stagflationary situation for good pockets of the economy because of the wealth gap. And then the areas that are doing well, like, certain pockets of technology where there's capital spending taking place, all those areas that are going to be doing well, they all need access to, they need access to silver, which goes back to what I was saying before. So I think in any scenario, whether there's inflation or deflation or both, silver is going to work. And because of the linkage between silver and gold, because of the financialization of the world, it's created a lot more fluff, which basically means that any movement that happens in one asset, let's say silver, even if gold didn't have it on its own merits, which it does, but if it didn't, because there's so many financial assets that are tied to it, they'll automatically have to buy all those assets in the index. So a move in silver for inflationary purposes will actually support gold, and a deflationary move in gold will actually support silver, but it doesn't even need that support. It's just going to get it because of two different forces. So what I tell people all the time is that the gold that is available today is actually more valuable than the gold that was available yesterday, because there's going to be less ability to get access to it in the future. And this is just basically a gift that you could buy it at these valuations right now.
It feels as though the price of gold and silver is being kept artificially low to enable the elites to buy in at these fabulous prices.
They've always done stuff like this.
And in the meantime, I feel like cryptocurrencies are a distraction. I think the real money, the serious money, is still going into precious metals, and the cryptocurrencies are meant to distract. Do either of you have a comment on that?
I mean, I don't even think you need it. I do see where you're coming. It definitely is a distraction for many different reasons. But I've been calling, like, when crypto was like, I've traded it. I've looked at it in the past. I like the DeFi space because it actually makes sense. There are certain reasons, but Bitcoin itself is an extremely inefficient way of basically serving as a currency. It's a horrible currency because and people, that's why people say, oh, it's not a currency, it's a store of value. But I don't even see it necessarily as a store of value, because a store of value needs to meet many factors. It can't just be, oh, there was a big move. I mean, it needs to be, you need to be sure that there is no back door for somebody to take it down, whether it's a back door by a technology guy that's going to launch a cyber attack on it, or the engineer of the whole thing maybe, set it up in a way where the big players in it could actually launch an attack. It is getting harder and harder, because the longer it withstands the test of time, it's going to be harder to take it down, but
Mhm.
nothing's impossible. So whereas at least with gold, we know it's stood the test of time for thousands of years. We know that you could protect it in an area that can't be like launching a cyber attack on a bar of gold isn't going to work. You
Yeah.
can't do that. So I like that aspect. And then the real scary part is what the government and the elite have in mind in terms of, because they want to protect their power. That's the whole thing. Like so they want to keep people in check just enough, like to feel that they're doing well enough. But but at the same time being able to have some level of control. And the thing is, with cryptocurrency, they could easily, people say, oh, you can't shut it down because it's decentralized. But that's actually not totally true, because most of the decentralized coins today, basically, in order to run them, they're using digital real estate. Like, for example, some of them are using, whether they're using Amazon or Microsoft, they're using servers that are actually centralized. There are a few coins, but those aren't the main ones, that are starting to make sure that every aspect of their connection that actually allows it to operate is completely decentralized. But when you're dealing with that, there's other issues. So I guess what I'm trying to say is that there are so many unknowns in the crypto space and the risk factors that gold doesn't have. So if you're going to invest in something where people argue and say, oh, crypto's a store of value and gold's a store of value, let's give them the benefit of the doubt. And let's say both of them are a store of value. At least in gold, your risks are, okay, as we talked about, manipulation, okay? Your risks are governments, well, it goes back to manipulation. Governments trying to drive prices as low as they can because they could see the entire book. They have access to, how many people are, on the long side, how much pain would I have to push the market down to flush them out so that we could just, acquire massive amounts of gold while the flush is happening, because they don't want to impact the price by buying it and then causing it to go up too quickly. So I agree on that. The other thing is the risks of the cyber risk and the regulatory risks that are outside of the jurisdiction that's trying to buy gold, because everyone in the world has a history of buying gold, but not all governments in the world have an interest in owning crypto. Not it's not the same. So do I think that it's not possible? Yes, it is possible that I'm waiting. If there is another buy signal on Bitcoin, yeah, I mean, if somebody asks me, is there a buy signal, I'll tell them. But it doesn't matter. So what? So it goes up and they double or triple their money. You could do that with almost, pick any stock that has a future. It could also double and triple its money, but it's not gold. It's just a paper asset. And crypto is really just it's a pointer in a chain. I mean, what do you own? You basically own a point. I mean, I don't know.
It's hard to compare the two assets. They are very different. I agree with you. Gold and silver, they're hard physical assets that have 1,000 years of history, whereas crypto is new and the verdict is still out. But I think
and I think there's money to make there. And if you want to trade it, but don't use it I wouldn't use it as a store of value.
No. What is the probability that gold or silver might become illegal for individuals to own? That has happened historically. There have been periods of time where it is illegal. Could we ever see that again?
Oh, anything is possible. But at the same time, okay, but let's just say, let's say somebody says, well, could you see that again? You can make the same argument about anything. If you invest in an alternate asset, could there be a complete washout that will wipe you out? The chances of an alternate asset wiping you out is much higher than a situation where It depends how you own gold also. Like, I mean, if you own gold, there's different ways to own it. Historically, like you could own numismatics, you could own, but that's dangerous because if you're not an expert, you're probably going to lose your shirt spending
Mhm.
too much money.
Mhm.
But yes, it can happen, which is why you want to have a diversified portfolio. You're not going to have 100% of your assets in gold, but even a small amount, like, even 10 or 20% in gold, if the kind of things that I'm seeing transpire, would be able to protect a portfolio. And if it doesn't transpire because the government's to try to manipulate this thing, and these other areas continue to get bid up, you're not going to find yourself in trouble. You'll just find yourself still okay. But if the rest falls apart, then a few ounces of gold is going to help the
It's
situation.
helpful. Well, my big prediction is, and I think this is shared by most economists around the world at this point, is that the fiat currencies are going to be collapsed.
Yeah,
It's just a matter of time. And
yeah.
when they are collapsed, do you expect, first of all, do you agree that the fiat currencies are going to collapse? And do you feel that the new currency, whether it's a digital currency, do you think that it will be backed by gold? Do you think that's the ultimate plan with the elites who will be trying to launch a new digital currency? Is it important to them that these digital currencies are backed by gold or no?
I think it's important that it's backed by something
Mm-hmm. By
because
what? Mm-hmm.
well, I would think gold and precious metals makes the most sense.
Mm-hmm.
Because
Mm-hmm.
there's nothing else that people have really used successfully
Mm-hmm.
over time to back something. So yeah, I do believe that would be the most likely thing. If it's not, the reason why they would want to back it with something that people believe in is sound, is because again, the distraction or the crypto. If crypto did become a threat, if they felt like that was a threat to them, they'd want to make sure that they remove that threat, or in a perception of that threat by telling people that, hey, you know what, this, we're not just like going to make, this new currency and give you nothing. Like they'll just, and you know what, they could lie about whatever they want. Like they could
Mm-hmm.
even say we have X amount of gold backed by this, and really it's not really allocated, and they still will find a way probably, because historically I always find a way to financialize things.
Mm-hmm.
So they'll just find a law that will allow them to hide the fact that they're actually using that gold as collateral to do other things, and really their money is not back because it's being used by the government, and it's at risk to other allocations that they may be doing on it. So I wouldn't necessarily trust that either.
Mm-hmm.
They don't show the books. They don't show everything that they're doing.
Yeah. It's all smoke and mirrors. So let's talk about the Great Reset. I think that the World Economic Forum has an agenda, which they call the Great Reset. These global elites definitely have an agenda. Give me, both of you, if you could give me your read on how gold ties into this agenda that they have for a new world order. How is gold going to play a part in this agenda that they have?
I'd rather stay away from talking about their agenda because I don't really care about their agenda. I just care about, like, at the end of the day, like what my methodology is based on is, rather than looking at an output, which is like price, and then trying to do voodoo economics on price and say, hey, look, this happened in the past. Therefore it's going to happen in the future.
Mhm.
Markets are made of people and machines, and I'm saying machines because today they're run by machines to some extent, but still programmed by people and how they evolve by people. So
Mhm.
at the end of the day, to make a price happen, there has to be a supply of some kind of viewpoint in the world,
Mhm.
on the long side, and then somebody else having a different view on the other direction, and that's what makes a market.
Mhm.
So what I try to analyze are, like, what are the mate, like, by looking at all the different asset classes, and then breaking them down into their specific parts, and then looking at where we are in terms of the narrative of who's perceiving expectations of change in one direction or another based on their narratives. I'm trying to look at those live factors rather than what's happening in the past, and then saying, hey, is there a story that you could put together that would explain why price is where it is right now and where it may be going in the future? And then on top of that, I look at ratio charts that show where the flow of money is going to go based on those changing perceptions. And right now, what it's telling me is that we're in a very like a sensitive part or state in the market where any slight change in perception from one side or the other will actually launch a self-organizing kind of it'll self-generate a very large move in the market in one direction or another. So it's extremely fragile right now. So it doesn't matter if there's an agenda or non-agenda, because there's a certain number of people that believe in it and there's a certain number of people that don't believe in it. And it doesn't even matter what the truth is, because if the truth is that there is an agenda and it's absolutely happening, then the other side that's countering that trade is going to produce tension. That tension is actually going to make it happen. Like, so what I'm saying is the move is going to happen regardless of whether there's an agenda or not. Yes. If you have the setup of a fragile state, and then you have a fundamental event like a reset where the switch is flipped instantaneously, then you could have an immediate. The only difference is you could have an immediate move like overnight. That, like, just like with the pandemic, like the world was different the next day. You could have a situation like that where everything is fine and then everything isn't fine. And over the past number of years, we never really had something like that. We've had big tail risk events in the market, but they were really a lot in the financial space, and it wasn't felt across the board necessarily in all parts of the economy, like at the same time. So I believe this time it's going to be, but I wouldn't be surprised that the Fed continues to get locked in a box before. It's not just the Fed. The Fed doesn't have the power anymore because you have all these other central banks, and you've got the supply problem that can't be controlled by a central bank. They could like do the demand side and try to manipulate that, but the problem they're going to have now is that everyone is competing with their self-interests in order to protect themselves. And the problem that you're going to have is that you're going to have an increased likelihood that they won't be able to actually add enough liquidity to help the illiquidity in the portions of the market where credit isn't going to be given. And what scares me when I look at it right now, I don't know if you've looked at this, but if you take a look at the yield on junk bonds compared to the inflation rate, it's actually below the inflation rate now in junk bonds, which is like, I mean, it's bad enough that the 10-year, or is actually like negative real rates, but you have negative on the junk bonds, which tells me that, okay, this isn't going to end well. And the Fed is either going to continuously have to increase their money supply into the financialized world and drain credit from the real economy to the point where the purchasing power of money is going to go to zero.
Yes.
Okay. And there's no way to protect yourself in that situation other than owning an asset that has a finite supply and is becoming potentially more finite without further increases in inflation.
I agree with you. Hard assets are essential right now because of inflation, the devaluation of the currencies. The M2 money supply this year has doubled, which tells me that the value of fiat currencies has dropped in half. And so the only way to protect yourself is hard assets. And that's where I think gold and silver, real estate, all of these hard assets are essential, because the purchasing power of the money in our pocket is shrinking as we speak. And it's a very precarious situation. Phil, do you have any comment on any of this, or what are you hearing from your clients?
Well, I think just before I speak about what I'm hearing from my clients, I think it's important to note how much stockpiling of gold is really going on with the world's wealthiest nations. So I think there's a lot of public information out there where an individual can see that this is happening, and I think that's what's really alerting our clients to sort of do the same thing. And I think, we've kind of touched on different asset classes, and I think it would be a good exercise to get into speaking about real estate a little bit. I think when I'm speaking with my clients, a lot of them are considering intergenerational wealth transfer, and I think there's no risk in diversifying to other asset classes. And if you listen closely with some of the greatest thought leaders in the crypto space, you're going to hear that a lot of them are only allocating 2 to 4% of their investable assets into that space. So it's an exciting time, and I think it's important to stay abreast of what is actually happening, especially since governments worldwide are also getting into their own cryptocurrencies, and we're probably 7 years or less away before the whole world is digital when it comes to national currencies. So I think having some allocation in the crypto space is a good way to stay aware of the changes. A lot of our clients, when they look at the precious metals, they look at really 3 groups. So they're looking at gold and silver, as we've talked about, and they also look at the platinum group of metals as well. So I think depending on how risk averse they are, we've touched on, Efram did a great job of speaking to, sort of a 50-50 split, or being more overweighted into silver if you believe in that trade and want to sort of hold through that trading period, which is over the next few years, as he's discussed. So a lot of our clients are sort of fall somewhere between 50-50, or a lot of clients will also, again, stick to that 10 to 20% of investable assets in gold, and then look at the rest of their allocations and weight them into silver and the platinum group metals. So that's kind of what I would want your audience to consider is take a good look at, how much risk can you stomach, and then, do some research. There's a lot of great information out there, and you'll find that we also offer a lot of great videos where you can get the basics of investing in precious metals on our YouTube channel. So Strategic Wealth has a great YouTube channel where you can get some fundamentals on the precious metal space. I think another thing we talked about was cyber warfare, and I think that's, you can see that that's an increasing concern. There's a lot more malware out there than there ever has been before. So I think that's something that I would just, encourage. In the spirit of wealth preservation, it's great to buy the right asset classes, but also ensure that you're protecting your data and you're protecting your identity online, because now everything's moving more and more online, especially because of the pandemic. Everyone's been, in their own home offices and on Zoom calls, and really much more exposed than they've ever been before. So I think that's something that certainly is in our office is a top priority, and something we're focusing on as well. So I think that's where I'd like to guide your audience to kind of focus on is those 3 areas: is the right allocations across asset classes, and ensuring your protection of your data. And I think it would be an interesting point in the conversation if we could kind of touch on real estate, because a good reason to hold precious metals as well is real estate is cyclical. So you may be at a time when you're transferring wealth from one generation to the next, where you want to have the precious metals to insulate you in the event that the real estate holdings that your family owns are not at a time where it's advisable to be selling, basically. So
Right.
maybe we could kind of touch on that as well. I think that's an important asset class.
Mm-hmm. Those are the main, in my mind, those are the main asset classes. I think precious metals, real estate, and the stock market. Those are the three areas that I've directed my clients into in the past. And that allocation is sometimes a difficult choice. I am leaning more towards precious metals than ever before because I'm uncertain about the future of real estate in Canada. I'm worried about capital gains exemptions being removed. There's been hints that federally they're suggesting that the capital gains exemptions might disappear. So, as an asset class, real estate is looking less appealing in my mind. Do either of you have any comment on that?
Well, I think I would just speak to that. Again, with our clients, we're fortunate to have exposure to clients worldwide. A large portion of our clients are based in North America, and they have similar concerns, whether they're in the U.S. or Canada, that you've expressed. And I think you're seeing families and businesses that had a higher allocation towards real estate in previous years starting to shift their weightings of their portfolios more heavily into precious metals. And for the same reasons, there's just a lot of unknowns right now. And I think that, again, something that's physical and tangible, and also, in a safe jurisdiction,
Mm-hmm.
to preserve a certain portion of your wealth, it's something that, whether you're a multimillionaire, or just sort of in that entry level of building wealth,
Mm-hmm.
it's still the mindset is the same. So again, I don't think people should be shy. They shouldn't see there's a stigma around investing in precious metals. They think, oh, I have to have hundreds of millions of dollars to own precious metals. That's not necessarily true. It's about percentages, and we make it very accessible. So I think people shouldn't be afraid of the unknown. They really should take the time to educate themselves.
And I think right now, I say to my clients, think like an elite, act like an elite, invest like an elite. Because the elite are, in my mind, the elite are putting their money in certain places right now. And we should be following suit, regardless of how much money we have. It doesn't really matter. I think we really need to steer ourselves in the same direction in terms of making plans that make sense. And I think we should be watching very carefully to see what the elite are doing with their money, and we should follow suit. Do either of you have any comment on that? Or
I totally agree with that, but there's another aspect of that is it's not just about maintaining the value over time, like for gold to maintain the value, or for some people that think it's gonna like go up dramatically and they'll make more than the increase in the inflation rate. But it's also about, it keeps you out of trouble, but of having assets in areas that could really have strong tail risk events to the downside.
Mhm.
And it's a lot harder to overcome like a 40, 50 or greater percent drop in your assets when you're going into a new cycle where the volatility could be compressed and harder to actually get the same kind of gains. Whereas if you're in gold, you eliminate some of that downside, as well as have access to some upside and preservation in terms of purchasing power. So I like that. In terms of real estate, I do agree with you that I believe there's a couple time zones that I think are relevant for potential instability or changes like in the real estate market. We've gone through a period where there's, especially in the pandemic now, like there's a lot, and even before, it started before the pandemic, but there's a lot of homes that are basically held by the banks right now that are going to be like unloaded in the market, and a lot of new houses being developed because people basically didn't want to move into certain areas. And as this pandemic lifts and pockets of instability occur in the economy and the credit markets, you can have a situation where lots of real estate is unwound all at once in the market, and you could get a pretty sizable correction. Even if that doesn't happen, I do believe a demographic shift over the next 2 to 3 years, maybe after around 2025, whatever, you could see a dramatic reversal in the price of land and real estate in favor of other asset classes. So I just think from a long view, maybe not like this month, but starting at the at the beginning of next year, there could be increasing unknowns in the real estate market across North America. And one last thing I'd like to add is that most of the big moves in precious metals usually happen around major policy errors. And there couldn't be a better chance of a major policy error going forward, because we're living in a time where there couldn't be more polarizing narratives around the world that each have an extreme amount of uncertainty associated with it. So it's not like even the elite have a handle on exactly where this thing is going, which is exactly why they own precious metals, because they know that it's that uncertain.
That's an interesting point. We like to think the elites all know the agenda, but it may be a very small handful of elites that actually, the inner circle, that really know. And the others are more, in the dark as to what the bigger picture is. Well, that's a very interesting conversation. I really appreciate Philip Zabacosta and Efram Hoffman. Thank you so much for your time and your insight on these important topics. And I look forward to chatting with you both again.
Likewise. Thank you, Marianne, for your time.
Thanks, Marianne. Thanks for having me. I appreciate it.
Thank you.